Bitcoin at $30,000 is just hitting differently in 2023 compared to 2022. Amazing what a year can do for sentiment. Bitcoin, I am your father. No! Anyway, jokes aside, why has Bitcoin soared up by 100% in the last 4 months? What are the key narratives we see driving Bitcoin forward, and what could come next for Bitcoin? What are the threats and opportunities to watch out for the rest of the year? So first, there are a few big factors that have really been driving the risk-on attitude in the markets this year. The biggest one is probably the rise in global liquidity, which was initially, of course, led China back in November, which marked a global liquidity bottom, actually. But China was shortly followed by Japan, and then, of course, by the USA, with massive central bank intervention into markets over the last 4 to 5 months. The USA, though, even though they didn't lead this global liquidity rise, may be the craziest part of this equation, because in response to bank failures in the USA, they actually launched the Bank Term Funding Program. This program basically backstopped all US bank deposits and guaranteed to provide money to struggling regional banks that are currently holding bonds and mortgage-backed securities at unbelievably big unrealized losses, like $600 billion worth of unrealized losses right now. They then extended that Bank Term Funding Program out to central banks in Canada, the UK, the EU, and Japan, basically meaning that the Fed is ready to bail out everyone. QE infinity, QE global. It's insanity. This will require, of course, a ballooning of the balance sheet, which is already happening, and a massive printing of money, which is already underway. So that is one big piece of the puzzle that is the big factor probably driving markets right now. The other big factor, of course, is the Fed, in particular, how they're going to continue to react to the falling inflation. Remember, inflation fell by a full percentage point last month, pretty dramatic. And while the Fed has continued to hike up interest rates, basically without any kind of stopping at all, there is heavy speculation the rate hikes will be ending soon. Now, many people are expecting to see them raise rates just one more time. Now, that does not mean an immediate pivot and that they're going to start cutting rates. Rates could stay high for months. In fact, the Fed has said that they expect to not cut rates at all in 2023. By the way, let me know if you think the Fed's just going to do one more or maybe more than one rate hikes down below in the comments section. Anyway, stopping rate hikes could indeed be the fuel needed to help markets perform well for the remainder of the year. And the other factor, of course, that has been really fueling speculation in markets is actually the banking crisis itself. So far, 3 banks in the USA have collapsed, with many more still teetering on the edge of a cliff, right? Will they or won't they? Will they or won't they? Fears continue to run rampant that more banking chaos could be coming about. Now, more on that in a moment, but the one positive side effect, which is pretty interesting, that's come out of the banking crisis is that, well, people are starting to not trust the banks, and they're not trusting the dollar as much either, which of course we see is being debased by central banks. There's even fears about its continued status as a global reserve currency, with the BRICS group rising up and all that stuff. And of course, a strong distrust in banks. This is actually then fueling a safe haven narrative for the rally. Gold, for example, has rallied, nearly hitting a new all-time high the other day, not quite though. Bitcoin likewise has had a big rally, and although it's far away from its all-time high, what is very interesting to note here is that we are seeing a strong increase in the correlation of gold and Bitcoin, meaning they're moving closer together. This is indicating that market participants are looking at Bitcoin as an alternative hedge position, right? Something they're getting gold, right? It's an alternative to gold, but they're hedging against dollar chaos. Now, you'll notice not much has been said so far in this video about crypto markets specifically, and yeah, sure, the halving is coming next year, so we can start latching onto that narrative. The Ethereum staking unlocks, big time bullish. We did a video on that the other day. I'm mega bullish on that, so that's a big thing, but maybe not driving markets as much as we'd like to think. Of course, we had FTX collapse, and that launched out a lot of the toxic leverage in the market. But what's really driving markets, it's all the big macro stuff, right? Bitcoin and crypto more broadly, they don't live in a vacuum, unfortunately, even if we'd like them to. These markets rise and fall with the tides of global money coming in and, of course, going back out, as well as the sentiment that moves along with that. Now, before I break down what comes next, I want to let you know that every week my team and I produce the Wealth Mastery newsletter. Now, look, if you struggle to find the time to keep up with what the heck is going on in cryptocurrency markets, you struggle to find those money-making opportunities in the cryptocurrency markets, then this is the newsletter for you. Every single issue is just jam-packed right full with alpha on airdrops and NFTs, altcoins, decentralized finance, technical analysis, the latest news, of course, news, it's a newsletter, and much, much more. Join our over 63,000 weekly readers and sign up for free, yes, for free, using the link down below in the description. So what comes next? Well, the shorter answer is no one knows, but we can and we are, of course, going to speculate on what could be happening. Now let's take the optimistic scenario. Global liquidity continues to rise, of course, spurred on by China primarily as they're reopening to the world, creating a big spark for the global economy. The Bitcoin halving narrative continues to grow. More big institutional players ape into Bitcoin, ape into Ethereum, driving the entire cryptocurrency market up. The Fed does indeed pivot and start lowering interest rates sooner than expected, potentially, creating even more excitement in the markets, sparking a new rally for risk assets from which, of course, Bitcoin and cryptocurrency more broadly will be very likely to benefit from. Then, of course, we just have the lingering distrust in the banking system growing as more banks collapse, thus driving more people into safe haven assets of gold and Bitcoin. But what are some scenarios that could ruin the party, basically? Well, the banking crisis could get a lot worse before it kind of cools off a bit. And while things have, for the short term, mellowed out a little bit, the Bank Term Funding Program probably going to solve the banking issues, but if it doesn't, well, then we could see some real chaos unfolding here, right? As dozens of banks could still collapse. The fear alone of that could still derail markets. Actual collapse could cause real panic in markets, so this sort of thing to keep in mind. Another big factor is that US regulators are going on an anti-crypto crusade right now, and we may decouple from macro in a bad way, right? Most exchanges are being sued in the USA, DeFi, stablecoins, everything's under attack by US regulators. And the situation is so absurd that when the SEC chief was asked whether or not Ethereum is a security, you know, the second biggest cryptocurrency, is it a security or not? Well, this was his super lame answer. Notice his shaking hand, by the way.
Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said that you're not going to speak to one, except you've spoken to one, Bitcoin.
Man, oh man, regulations in the USA are an absolute mess right now. And the USA is going to end up being just a big loser from it because other countries are opening up to crypto. But there are a lot of wild cards that could still pop up with all these different court cases going on in the USA that could very specifically affect crypto markets, so we have to be aware of that. There are also fears, for example, that a commercial real estate crash could seriously duck up the markets. Morgan Stanley, they've come out and they are warning that this could actually be worse than 2008. And look, we've heard that one before. Everybody likes to say it's got to be worse than 2008. Hasn't been so far. But in all seriousness, a massive collapse in the commercial property markets, that's no bueno, man. That could cause some real turmoil in markets and cause widespread fear and uncertainty. So watch this space for sure. And of course, perhaps the biggest fear for markets right now is the fear of a big US recession. Now, the funny thing is the predictions for a US recession range from, well, there isn't actually going to be a recession, to, well, if there is a recession, it's going to be short, it's going to be shallow, so just don't worry about it, to repent now, the end times are here, the Armageddon is coming, and this will be the recession to end all recessions. Sadly, no one really knows what's going to happen, but markets have become so distorted due to money printing and, of course, to the central bank interventions that who knows? Who knows how it's all going to play out. But this is definitely a risk factor to keep an eye on for the rest of the year. Okay, that's it. Subscribe now. I'll see you next time.